Folks, last quarter we published our first coverage of Franco Nevada's earnings, and quite rightly, we referred to the results as being a bit of a shit show. The company's second quarter results were marred by the loss of a major royalty over political activism in Panama, poor production at two key assets, and increased taxes. Unfortunately for Franco shareholders, not much has changed in the third quarter, with gold equivalent ounces actually declining even further when compared to the second quarter results. On the bright side, though, at least the gold price led to some improvements. Guys, we're talking Franco Nevada. We're talking Q3 earnings. It is Q3 earnings season. Let's dive in. In the third quarter, Franco Nevada recorded top-line revenue of $276 million, a 6% increase versus the second quarter, but an 11% decline on a year-over-year basis. Excluding Cobra Panama, that major mine in Panama that lost its social license and had to shutter, revenue would have improved 14% on a year-over-year basis. Analysts, meanwhile, had called for $273 million in revenue, so the company beat on that metric. Gold equivalent ounces sold during the quarter amounted to 110,000 ounces, which was a decline of 164 GEOs on a quarter-over-quarter basis, and a vomit-inducing decline of 32% on a year-over-year basis. The decline was impacted by the loss of Cobra Panama, which Franco says accounted for 22% of the year-over-year loss, and B, due to record gold prices, which reduced the conversion of non-gold revenue in GEOs, for which 3% of the decline was attributed. Net income for the quarter totaled $153 million, or 79 cents per share, a 13% tumble from Q3 of 2023, while adjusted net income totaled $154 million, or 80 cents per share, versus $175 million last year, or 91 cents per share. Analysts had called for earnings per share of 83 cents, meaning the company failed to hit consensus. Operating cash flow, meanwhile, fell 9% year over year to $214 million in Q3. However, this was an improvement over the $194 million recorded in the second quarter. Finally, the company ended the quarter again with no debt on their books and $2.3 billion in available capital, a slight decline over the $2.4 billion in available capital at the end of the second quarter. Yet, despite the declining performance, the company declared a 36-cent per share dividend, representing an annual increase of 5.9%. I guess at least something's going up relative to last year. Running the production numbers on a year-over-year basis, gold was down 2.5%, silver was down 9.3%, PGMs were down 58%, iron was down 16.5%, other mining assets were down 36%, oil was down 31%, and natural gas was down 37%. Whoo! So yeah, I guess it's a good thing that NGLs were up 0.18%. Otherwise, we wouldn't have had anything to celebrate. Excluding the impact of Cobra Panama, gold equivalent ounces were down 12.5%. Including Cobra Panama, GEOs were down 31.5%. So it's a bit tough to understate just how critical that stream was to Franco. All right, let's get into the outlook. And I'd like to apologize to Franco Nevada investors because it gets worse. You probably know where this is going now. Yep, it's a guidance cut, which follows the company in their Q2 earnings release indicating that they expected things to come in at the lower end of guidance. Lower than expected gold production at Candelaria and slower production ramp-ups at newly contributing mines have, however, resulted in lower precious metal GEOs than previously forecasted by the company. Add to this the impact of converting non-gold revenue into GEOs in a rising gold price environment, and well, Franco was forced to cut their GEO guidance. Precious metal GEO sales, meanwhile, are expected to come in between 340 to 360,000 ounces, versus prior guidance of 360 to 400,000 ounces, a 7.9% decline from midpoint to midpoint. Now, there is a glimmer of hope for investors. The company continues to add quality royalties and streams to their portfolio. In the third quarter, the company acquired a 1.8% NSR on Newmont's Yanocha mine for $210 million in cash, plus contingent consideration of $15 million upon commercial production being achieved at the adjacent Conga project. The royalty is immediately cash flowing, with current mine plans extending beyond 2040. The company also acquired a gold stream on SolGold's Cascabel copper-gold project in Ecuador in exchange for $525 million in project funding. The purchase is expected to provide 50,000 GEOs for the first 10 years of production based on current forecasts. Finally, Franco also loaned $35 million to EMX Royalty and invested $25 million in a private placement with G Mining Ventures related to its combination with Reunion Gold. A further $21 million is expected to be invested in the gold developer by the end of the year, following the acceleration of warrants. But long term, the company is still guiding to 2028 production of 540 to 600,000 ounces, which shows growth. And this doesn't even consider the fact that the price of gold has been on a tear, and in all likelihood will continue to climb given the state of the US government's balance sheet, which means higher revenues and higher cash flows for Franco. Guys, if you ask me, we're still at the point of the catch-up trade. I think that as gold has done what it's done, names like Franco Nevada, Newmont, Barrick are all going to become sexier and sexier for portfolio managers. I don't care that Trump got elected and gold got smashed the next day. I fully think that gold's going to eventually work its way back up, and names like Franco are going to be some of the hottest names on the street. Sure, it hasn't been a great year for Franco, but this is a company that has been a darling stock for decades, and I fully expect, with the shareholder base that they have, the liquidity that they trade, and just the general momentum that they've had for decades, that we're not going to enter a major gold bull market, and a name like Franco Nevada isn't going to catch those tailwinds and make shareholders some decent dollars. Am I long Franco? No, but I'll say this. It's a name that you have to have on your watch list as we enter a major gold bull market. All right, everybody, thank you for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, guys, let me know what your thoughts on the earnings were in the comment section. And if there's any other gold companies you want us to cover, let us know, folks. Thanks for watching.